Good morning everybody, welcome to another quick hit review video. There is a little bit of news out today for the dollar. At 1:15 we have some non-farm news coming out, and then at 1:30 we have the trade balance. So I am expecting a reaction there, so monitor that for the dollar. Other than that, as usual, I have half a dozen currency pairs on the radar, starting off with the euro yen. This is an advanced pattern. So we'll be looking for a rotation pattern. Right now though, we are within this consolidation area, so I would expect a reaction at this zone, and if this is a valid channel for you, you could look at riding it all the way up to the other side of the channel. So we're going to take a look at the 240. This is the cipher pattern. Now it is valid, completion was around the 786. The problem here is that if you are waiting for price to come down and come down to the X leg just here, which is the wicks, and look for a rotation pattern, then it's actually going to violate this trend line structure. But if we do come down to here, then we're at the 120-100 psychological number. We'll look for a rotation pattern, double bottom, head and shoulders, that kind of thing. It's very likely though that we're going to see a reaction at this point, so I would also monitor this, see if we can get some form of entry reason here. If not, then you actually have a little trend continuation trade here on the 15. So we had a move lower, a pull back, a move lower, a pull back, a move lower, a pull back. I would advise extreme caution though on that trend continuation. These channels can be very, very powerful, and we could see the reaction. So my personal view, I would just stay out of it. Because we have the potential for this cipher to kick in and go bullish. So, but again, if we do come down to this X leg, looking for those rotation patterns. Euro New Zealand had yesterday a trade on this, but I never got the entry, and see my workings out still on here. Right, we are looking bearish, guys, and there's a lot of room to the downside. This is our level of structure that's just been violated a few days ago. Yesterday this is where we were trading, but look at what we've done now. This is a rejection candle. We've got a long wick to the upside. We open and close pretty much in the same zone, and we've already violated structure, and we have room, guys, to come down to this level. This is a good opportunity to get short. So let's go and look at the 240. Here on the 240, I would actually wait for a violation of these levels on the 240. So here, you can see we haven't as yet violated. Let's go down to the 60, but this gets nicer the lower the time frames we go, because if you remember in yesterday's webinar, if you was able to join us, we spoke about the more times a structure level has been tested, when it violates it, the higher the probability we're going to violate with momentum. And with momentum comes direct moves, and with direct moves comes trend, and we can be more aggressive with the entry. So if we drop down to the 15, then on the 15 we have already had the violation to the downside. So if you wanted to be aggressive, you've got a beautiful bear candle right here. You can drop down to the 5. And depending how aggressive you want to be, you have right now this entry reason. So X to A to B, B to C, CD completion. The problem for me here is that on the 5 we have retested the lows, and this will give a double bottom. So while it is an opportunity, because we've come down to double bottom, basically it would stop me taking this trend continuation. So I'm going to wait to see if there's something a little bit better. It may be a case that we wait for another move lower, a pullback, and then a chance to get short. So monitor the Euro New Zealand. There's a lot of pips up there for grabs. Pound dollar, spoken about this for a long time. We now looking at getting involved in the head and shoulders. So we've got the swing in the market, the pullback, the left shoulder, the move lower, the pullback, the move lower. I've been saying for the last week or so, pay attention to the left shoulder, the wicks. We are within the wicks now. Okay, this is where we are looking for our rotation pattern. The problem for me is on the 60, the RSI is not oversold. Sorry, on the 240, the RSI is not oversold, but on the 60, we've just gone oversold by 14. But right now, there is no entry. So unless we do something like this, stops underneath here, looking for a retest of the highs. And don't forget, we have those two big patterns. I'll only draw one on for this video. X to A to B, B to C, CD completion. Second targets, we'll be looking for that 382, guys. This is a huge trade. So let's just put on that 382. We're going to be looking for conservative entries. We're going to be looking for, in fact, here on the 60, what we need to do is adjust our kill zone. Let me do this again. Okay. Highlight the 240. We're looking for rotations within the wicks, which is there. And we're allowed to drop one time frame lower and look for that rotation pattern. And if it will stay on, you can actually see we're still within that zone there. So a lot of pips up for grabs on the pound dollar if it comes off. New Zealand dollar, possible head and shoulders. I've been eyeing this up all week. And what we have is, if I put a structure level on just here, we had this level that was tested. We then violated this structure level just here. And what we did is the market came down into that level, and then yesterday we've put in an indecision candle. Now by itself doesn't mean a great deal, but it's after a big bearish candle, it's a sign that we could be running out of steam and we could be seeing a bullish move here. Now if we go to the 240, there really isn't a great deal here. You have had a higher high, higher close within the wicks, but this, we're not in trend, and this is a bit too aggressive for me. If we go down to the 60, this is what I'm looking at. 1 second, guys. Tenant texting me. Okay, mute that. We have this head and shoulders, so we had a move lower, a pullback, a move lower, a pullback, a move lower, and now we're going higher. You can see this better on the 15, and go back to the 60. Sorry for swapping and changing. I'm going to reduce this down. Rotation patterns, we're always looking within the wicks, and I've been a little bit cautious with this because we're within the wicks of this test and not that test. And just let me show you what I mean. So you can see, I've got to keep zoomed out, that we are within the wicks there. If I drop to the 15, doesn't want to display the highlighted price reversal zone, but we are within that zone. And yesterday, this is what I was paying attention to. We double bottomed, we rallied up, we pulled back, and if we throw a fib on from our swing low to swing high, we pull back for a 26.18, validating the 26.18, the double bottom, and the potential head and shoulders. Problem for me is it wasn't high probability enough. You know, these are being sent out as signals. I want them to be of the highest quality, and because we'd come into that structure level, which wasn't the highest structure level, I was being a little bit cautious. But you do have an opportunity here, because right here, this was another new high. So you have the opportunity now to get involved. And if you're aggressive or conservative, retest of the lows here, aggressive retest of the highs, and you could hold secondary positions for wherever you think next targets are going to be. I really don't know where they're going to be on this, but you have the potential here for this to go significantly higher if you wanted to hold it. Let's go and take a look at the dollar yen. Trend continuation opportunity, though I'm actually waiting for another violation of structure. So here on the daily, moving beautifully, move lower, outside return, move lower, outside return, move lower, outside return. You got your lower low, lower close, perfect trend continuation for a retest of the lows here. We can't get involved now. The reward to risk is terrible, but we can drop down the time frames and look for entry reasons. The problem I see is that we have this internal level of structure, and right here it looks as though we're putting in a 3-bar reversal for a counter trend move to the upside. So daily is certainly looking bearish, but 240 could be looking for a pop to the upside. Nothing on the 60 really. I'll take a look at the 15. I was looking at this last night, the move lower. This was not a valid flag pattern as per my rules, but nevertheless this breakout pattern played out perfectly. And right now we have double bottomed, so no opportunity for me just here. However, I think I checked this. We could have no back pattern, so it's a little too aggressive for me anyway to sell from this point. Again, we haven't as yet violated this level, but if we do, look for a pullback to this outside return and look for a chance to get short. Is this a cipher pattern? Yeah, you could, if you wanted to take this X leg, could look at this as being a cipher pattern, so you maybe want to look at taking targets here down at this 107 psychological number. So opportunity, we just have to wait on these trades. Dollar Swissy, this is a nice opportunity again in the live room. In the webinar we spoke about this yesterday, and we had X to A to B, B to C, CD completion for the cipher. We spoke about structure being held. We talked about getting involved getting involved in a trend continuation trade until we hit those targets at the 382, and in the night it provided that opportunity. So if I drop down to the 240, nothing here. I think it was on the 60. So this is what we've been doing. We've been in trend, new high, outside return, new high, outside return. And then what we did is we made a new high. It looks as though it's invalid. Right, ignore that. This was the new high. This was the pullback and a new high. But you would have needed to have looked within this zone. But what happened is we came down to this level, and within the first chance entry just here, we double bottomed. Now here's the thing. This is where a little bit of discretion comes in. This, even though technically this is part of your trend, this is a very shallow retest, and you could very well ignore this and say this is the main. We came into the main outside return. What I would personally look for is wait for this to be a confirmed double bottom, look for a pullback for a 2618. So you look at the 618, which is there. So stops going to usual place, an ATR below the low, and look at riding that up for targets at the 382, so around 48 pips of reward for around 28 of risk, guys. And I would ignore this in this situation. Let's go and just look on the 240. So it depends if we get the pullback, but that could be a very nice opportunity there for a 2618 trade. Next currency pair, couple to go now. Pound CAD. Yeah, we had a little win on this last night, 15 pips. Had to manually exit because of the news, but the trade did go on to win for 22. Structure level on at our lows. We've had a violation to the downside, so looking bearish here, guys, and we're moving very bearishly here as well. Let's go and take a look at the 60. Moving quite nicely here. Move lower, outside return, move lower, outside return, move lower, outside return, and we're moving lower. If we go and take a look at the 15, then we have this zone right here which was actually what we got involved with last night, which was it was a triangle, but that these patterns very often change into other patterns, and it was ended up being a low and tight flag. But luckily, due to 8,000 hours of backtesting these patterns and chart time, I knew exactly where to place the stop, and we turned what could have been a losing trade into a winning trade due to proper stop placement. But this is one of those situations where we can come back into the middle of these patterns and look for a shorting opportunity and look for a retest of the lows or even a trend continuation. Let's go down to the daily. Yeah, we've got room here to come down to certainly the structure level. Just let me zoom in. Yeah, so plenty of room here, guys. So pound CAD has a big ATR. So for me personally, I think I'm just going to look at a 1 in 1 out here. But if we come up to this middle zone and we put in a 3-bar reversal or an entry signal, you could be looking at a reward here of around 37 pips for around 20 pips of reward. So keep that on your radar. And the last one, dollar CAD. Dollar CAD. Right, this AB equals CD pattern, again guys, we've been over in the live room. So here is the clear AB equals CD pattern. It came into major structure. We had a higher high, higher close. The RSI went oversold at below 20. We're looking for extra confirmation the market's going to go higher. There's no double bottom, there's no head and shoulders for me, but we came in for the retest. We're seeing a pullback, and we could be putting in a higher high, higher close right now, but still not enough confirmation for me. Let's just go and take a look at the 60. Here on the 60, we had a move lower, a pullback, a move lower, a move higher. This level violated the outside return, potential rotation. Okay, but when we look at this, I've got nowhere to put my stops other than right down here, and this is still too aggressive for me. This is 70 pips of risk. There's no double bottom, there's no head and shoulders that I would feel comfortable at taking. There is, however, this right here. However, if you look left, this double bottom did not come into any structure, and so I want something more conservative, guys. So I am still monitoring this trade. The good thing about it is that we have a significant way to go before our first targets are hit at the 382, and I am going to wait for a better opportunity. If we get a move higher violating this structure level, another move lower, that would put us in trend, and then we've got our entry, and a lovely double bottom down here would be great for tight stops. So plenty on the radar today, guys. Just a quick one. We've had a cracking week so far. If we just go and take a look at the Euro Aussie, those of you that are in it and got the signal, well, we're waiting for a 144 pip second target trade to be hit. So we're up 130. And the pound yen, we've seen a bit of a pullback now, but we've had the breakout of that big pattern, that big flag pattern. Now, good grief, come on, pound yen 240. I actually, within a few hours of entering it, exited by mistake on this trade. I couldn't see my mouse, and I had my this open, and when I pressed to find out where my mouse was, I clicked close, so I entered in straight away. So I'm actually up here about 200 pips instead of 158. But the great thing is, guys, look at this breakout pattern. We broke out with momentum. Now we're down at this level, so expect a reaction here. The RSI has gone oversold. Expect a pullback. But hold this trade, guys. It has a very high probability of completing for 200 and I think it's 228 now. I think my actual figures are 260. So we're in this, guys. If you're not in it, hold for a pullback. Look for an entry reason to get short. That could very well happen. If not, I'm hoping it's just going to rally down to hit targets. That's it, guys. Have a great day trading. Lots of opportunities. Let's see what happens throughout the course of today.